On Monday, we'll see if this morning's tech rally can expand beyond the hardware into all aspects of tech, including FANG. I like that, Tang. My mom used to make that. I guess we probably weren't that doing well. You know, Tang is bad. It's nasty. Anyway, I fear that September just won't release its bearish grip on the stock narrative that easily. There are a lot of people who think it will. I don't. Now, witness the sudden downturn and hard downturn in the stock of Apple when a federal judge ruled that they must allow external links from their app store, links that let you buy their apps somewhere else. Now, that's a real blow at Apple's profitability, as the app store margins are huge. But Epic, the video game company on the other side of the lawsuit, wanted to reclaim more autonomy and keep more of its revenue, and the judge ruled in their favor, mostly. It's a complicated decision. Some people have been saying that it's not that bad. It's full of ambiguities. The judge explicitly says Apple's not a monopoly. That's a win for Apple. But she also ruled that they're violating California's unfair competition law. Big loss. I have no idea whether this ruling will hold up. It's been a long time since I was at law school. What matters, though, is that this negative news was not baked into the stock coming in this morning, which had been ripping over the last few weeks until today. I think it is going to shave some earnings off of Apple, and it gives more ammo to the analysts who've been bearish on this stock for ages. That said, yes, this is going to surprise you. But while you could try to trade it, I think it's going to be a loser to trade. I still think you should own it. Now, I don't love the ruling, though. Nobody's putting a gun to your head, though, and making you use Apple's ecosystem. I want to say it's bad for business, but really it's bad for Apple and good for third-party developers that want to make money selling apps. So you're going to be looking for number cuts in the out years, even perhaps from the bulls. And that's something that this stock, even if today's dramatic 5-point decline, can really afford. Monday could also bring the beginning of a serious backlash against President Biden's actions this week to try to get more people vaccinated in this country. Higher fines for no mask, OSHA enforcement, forcing federal employees to get their shots or get tested every week. I am totally on board with this stuff, as you know. We need to wipe this thing out, even if it requires a little coercion. But the anti-vaxxers and the leaders in Washington will whine about how this is a violation of their civil liberties. Never mind that we've had vaccine mandates for a century. I never heard about violations of civil liberties before. Away from politics and the legal system, it's going to be a pretty quiet week. Monday, Palo Alto Networks hosts an analyst meeting. I think this longtime Cramer fave cybersecurity firm will roll out some new products that will help them keep taking market share. Remember, cybersecurity is one of my favorite themes for this moment, along with financial empowerment via technology, as exhibited by the dramatic run in the stock of a firm today. That's the king of buy now, pay later. This stock was up 31 points or 34%. CEO Max Levchin explained the story to us just last night. And while the move today seemed exaggerated, you know that a firm has now joined Square and PayPal in the pantheon of financial tech. Has Zoom Video been overly punished in its inability to dramatically raise numbers when it reported last week? I think they'll make a really compelling case to own the stock at what's known as their Zoomtopia conference. All virtual this year makes sense given their business, right? Zoom needs to show us it can grow aggressively with new products and acquisitions. Without that, I'm going to tell you, I think the stock may even give back its gains that it's had in the last couple of days. After the close Monday, unsung warrior Oracle reports, and this stock has really had one of the most amazing rallies in the entire market. It's up nearly 40% this year. That's soaring much faster than its growth rate. Now, that might not matter, though. It's got a halo after years of being in the doghouse. The halo comes from its inexpensive nature versus its incredibly expensive colleagues.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.